Welcome to TradeTheNBI.com. This is John. This report is for May the 1st. We will scroll through the numbers. We had our cyan candle. We were expecting a higher move, particularly when we were looking at the futures from the previous day that were down. Gave it a great opportunity to be able to capture price at a much lower level by trailing it lower, and did exactly what it was supposed to do. And we'll look at the numbers on it. That makes it actually perfect for the year so far, so it's pretty crazy here. 4 months into it, having had as many trades as it's had, quite effective. So we can see still mixed bag on the readings overall. There it was. So this one produced plus 6 1/4 from a future standpoint. So it had a nice dip down, came midway into the lower part of the previous day's candle, and finished all the way back. Starting out with another one here. We'll see if it turns out that way. I mean, a long way to go in the day. We had slight tilt up of the red. That's enough to be able to begin to carry some momentum forward, even though you have green kind of going flat. We still have steel above the cyan, which if you have that red turning up, could be very bullish. And unless that cyan gets above this previous pivot, this could continue to go higher on that, which is very interesting given the weakness that was expressed all through here. It pretty much held up very nicely throughout it. So a lot of strength in that market, but then again, like we've talked about, there's a whole lot of places that you can put your money elsewhere. Still, nothing great about what we're seeing on the NASDAQ. You still have the red above the white, and it's just a tiny incline, and that's why we're getting just tiny little moves, but it's been consistent to the upside. So this cyan break for the negative has been sort of countered with modest action. This is one of those things where you can see that within the sell signal just isn't a lot of price movement to the downside, which shows some pretty incredible strength. Here we've got the YM, so we've got the red moving, taking over for the fact that you have weak behavior from both the green and the steel. In fact, the steel dipping below on the YM is a bit more negative, as is the green dipping down, but that red movement to the upside is supporting buyers to a little bit. You would now need to see this cyan really start to take off to the upside and really begin to see some retrace, and that hasn't happened as of yet. So, and it's interesting because we're getting very negative reads from the USO. We talked about this still being a sell, so that's downward pressure on oil prices. No change in that buy. We also see gold continuing to have its problems with the sell. We saw no change in that when we saw the dark red come in, which that actually is a little bit more advantageous for the market. If we'd seen the buy in gold, we might have been expecting more of a down move for the market, and it just didn't turn around. Now we had X here. We expected retrace for this because even though we had the nice little gold candle buy signal or yellow candle, we knew it was within the deep red and likely to take a little bit of a dip within that configuration. I kind of like these because what I'll do is when we dip below the lows of these buy setups, it's an opportunity to capture for a long trade when they go back above, and then you have a much easier stop because it's below those low levels, particularly when you're on rising extremes. It's just still, this is such a huge separation, this is not likely to hold up well. So it's one of those where you have to kind of keep them as day trades or in small ones. And likewise, you have the green above, but still in that deep red. And until this gets closer, and this could be very attractive though as soon as this starts to connect, because cyan below the -7 meeting a green on a crossover could produce a nice buy setup. We've retested all the lows on higher extremes, so the potential is there. Just need a little bit more help. This one doesn't need any help. We can see AIG doing perfectly off of cash going back all the way from this morning. And we went through a lot of chop period. Some people are like, oh, is this worth even bothering? Well, sometimes it is, because you just have to wait for it to finally emerge and take off. Created a little bit of a spider setup right there, so moving back. But again, we'll be watching for the next green pivot because the lower one is going to be problematic. The nice part about this was the steel dipping all the way down here gave us clear idea. And this all stemmed from an easy read after we had the big pop-up and off the positive extreme right here, and we expected the dip down to the low. So there's always plenty of opportunities to take advantage of new entries in that. Kind of a shame with this one because the double entry changed the trailing stop on the power mode because really wasn't necessary to trade this out, especially given what we knew about the daily cyan candle, but that's okay. It took the slight gain on the combined entry there, and it's all right. Nothing you wouldn't be able to see to go ahead and take advantage of. I mean, even at this point, the crossover there was just fine. You just needed to wait to see the follow through. So on any weakness there, it was a perfect opportunity to get back into the setup if you desired. We'll take a look at the intraday real quick. Looking at the intraday, so we had started out with a little bit of the decline. We were expecting gap fill to take place. It took a little while for gap fill to come in, but once it was, had lots of nice little buy configurations. This is buy sell A for those who want to look, because now I've included the B and C versions that are the prototypes that just give a little bit of a variation as we start to really hone in on each of these different zones, whether it's from the purple to the red, which is 0 to plus 7.5, 7.5 to the 13, and then 0 to the negative 7.5, and then negative 7.5 to the negative 13. And we begin to look at each of the configurations within there, and it really begins to break out selectively what's taking place at each of the different zones. So that becomes just complex as far as what it takes in the program, but it does give insight as to specific imbalances wherever they exist and which one of the color segments is dominant at that point, being above the 0 level, as having the strongest, I guess you can describe it as a polarity or just strength. Let's go and take a look at some of the alert stocks. So we have the Apple here from the alert stocks, a lot of positive extremes. It started to put in the initial sell from right over here, and that followed through. And you still have overall pretty decent holdup, but just a little bit of pressure on that. And so this is one of those where you watch for intraday turnarounds because you're still in an overall buy, so it's just an opportunity to capture any declines that are in there. And I would typically use the 78-minute with the 15-minute alert setups, and you're all set. But even with just the 15 minutes, you still want to be taking long sides with buy signals on that. It's just helpful knowing that you have the potential for those retraces, and you can look for a little quicker plays until things stabilize with having reset on some of those. Here you have a nice improvement from Amazon with the steel moving above the cyan, but that separation is still sell signal overall, and so it's just one of those where in this case here you look for pops now to think about a short setup, but you would need to see the steel dip below for that, or at least a cyan pop up. So again, that's something worth watching on an intraday. For now, you can trade to the long side, and then you look for that transition. Likewise, right here you see that massive move of the steel to the upside, along with the greens giving it some upside push, but broader trend is indicated by the fact that you still see that huge separation between green and cyan. That will have to significantly close the gap, because again, all I have to do is slide this from back over here, and you still have a huge gap there that will need to be closed before you're going to get any real strong positive return on it. Likewise, the separation here for Netflix, that's not going anywhere. And people say, oh, but $3 move, $4 move. Well, yeah, this is where the 15-minute alerts come, but you have to understand that the overall bias for Netflix would have to stay in the negative category on a sell signal. Likewise, PCLN, no questions there. This is almost identical with that configuration. A little slight improvement with that. And this is where it becomes interesting, because you can intraday take advantage of those if you have the indicators on an intraday basis, but from a daily overall standpoint, you still have to be expecting lower from PCLN. No shock with that. Tesla, it's kind of held up pretty well, given the fact the meaning right there broke away to the downside, even though we got a slightly negative divergence. What you really want to see here will be, for a short, is a pivot lower on the steel here at this lower level. with the rising sign, and that will be a really good short and should take back to the low at least. So that would be what, all the way down to the 190 range. So yeah, that could be worth a good $20 move. Always nice when you can be able to see that. There was no change with the sell for Twitter within its configuration, given the slight pop there, but there was literally no movement in the red in that, I could take this one and just start it from right back over here and increase it. And so this becomes that DOC spread you hear us talk about so often, where it just starts to break away. And it's interesting because I'm breaking out now for the video I'm going to be doing in the different zones. Your strongest ones tend to be above your zeros, and particularly any that are above the sevens. And then it gets a little more complex where you have to look at a few more details to deal with ones that don't even break above a zone. So when you've crossed over from one zone, failure to break into a new zone and go into that flat and then start turn down usually gets kind of ugly. And in this case, you can kind of see that ugliness develop. Gets pretty strident. Baidu, yeah, it's been in a sell, wasn't even a concern as far as that goes. No change with that. We'll get the FAS, and then we have what, Facebook. FAS right there, so nice little turnaround from there. It'll be interesting to see where that pivot's got to get above 10.3 on the steel. But it was a nice up pivot for both the steel over a couple, and the green gave it enough to propel it to the upside. But now you need to start seeing the red transition, and you have to have the green get above there. So in order to get your 1, 2, 3 combo here, you really need to start seeing it move across. So keep an eye out for that one. I think that's going to depend on the market too, as where it is. And Facebook, from that standpoint, nice little pop within the overall short spread. Same as all the other ones we've been looking at. Again, that green's got to get over. If it starts to pivot down, particularly on higher prices, it's going to be a beautiful short. If it doesn't get across, then looking for weakness to enter into a long setup would be the way to go. So that's the current state of affairs. As always, you can look for me on the private Twitter feed, StockTwits, and expect to have another great month going forward here. So as always, trade well.